Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Jeffrey Tucker. He is the founder and president of the Brownstone Institute. He is a former editorial director of the American Institute for Economic Research and the author of The Market Loves You, Why You Should Love It Back. Jeffrey, what a pleasure. Thanks for joining us.
Well, thank you. And thank you for your Twitter account, which is consistently one of the most engaging and interesting, thought-provoking Twitter accounts out there. I'm constantly sharing your stuff with my followers. So thank you for that.
Thank you. That's an absolute pleasure, Jeffrey. So, with all the chaos in the market, do you believe ever it's realistic for the Fed ever to get down to 2%? Are we ever going back to normal?
Unless I'm very wrong, and I could be, my sense is that the Fed is pretty determined to make that happen. And I tell you why I think that. I think Jerome Powell is of the opinion, that, as a lot of people are, that Ben Bernanke was a disaster, that he unleashed hell on the world, starting in 2008 with his 0% interest stuff. And to appreciate the radicalness of that policy, you really do have to kind of scroll back in time and look at federal funds rates in real terms since the end of World War II, and see that we've never had such a long protracted period in which unreality was just sort of baked into the economic structure of our lives.
Mm-hmm.
And if you wonder why everything seems to have gone haywire in the last 14 years, this is why. I think you can look back at these charts and tell the story of our entire history since World War II, and the sheer absurdity of maintaining negative interest rates for 14 years just unleashed all kinds of hell in economics and in culture and the social order and politics, every area of life. And now I think Jerome Powell is pretty dedicated to, at the very least, getting it above zero. His task is made very difficult by the presence of inflation, but it's the only way you're going to kill the inflation is to get the federal funds rate above the prevailing rate of inflation, which means that we could, depending on how things turn out over the next few months, we could be looking at more and more increases. We're really only at 3.8% right now, nowhere near positive. So if we're really intending to get in a positive direction and reverse the errors of the last decade and a half, he's got a long way to go.
Do you think Powell is calling up Volcker and saying, "Hey, I need some advice. What do I do here?"
It's baked in. What's happened to us is baked into the whole story of what inevitably happens under these conditions. I mean, you can't just keep going on with this policy, or else we're going to be looking at 10%, 15%, 20%. Like once the inflation gets embedded, and if you don't reverse these policies, then you're looking at a possible and eventual crack up boom. So Powell is using this moment right now to protect against that eventuality, which is as much a problem for bankers as it is for anybody else. And he's doing it with really what amounts to brutal methods. Now, to be sure, a 3.8% federal funds rate doesn't sound historically radical, and it's not, but just the pace of the increase is what's striking. I mean, we've never seen anything like this in the history of American monetary policy, this dramatic a turnaround this fast.
Yeah, it's the fastest pace of rate hike increases in history. That's what a chart I seen the other day. So what shifts are you seeing in the labor market, and what is it telling you going forward?
The labor market is a source of endless fascination and mystery on the part of everybody, because after lockdowns we just lost millions of people out of labor markets, and they never came back. And so unemployment rates are still, whatever, 3.8% or something. But that number doesn't mean anything because labor participation is still not near pre-pandemic levels. And if you look at the worker to citizen, ratio, whatever that is, the workforce participation, I guess, rate, it's still far below. We're missing, if you try to run a regression from 2019 forwards and try to do a conjectural history, where we could be missing as many as 8.3 million workers. Now, you asked the specific question about what happens now. And I think the answer really, you have to kind of look sector by sector and look at these sectors that ballooned beyond their sustainable size, over the last decade and a half, and particularly the last 3 years. And there you're looking at high-end white-collar professional level Zoom jobs. That's where the big pressure for firings is coming, and that's the trend we've seen over the last 6 weeks that hasn't shown up yet in the data. It could eventually fold into unemployment rate. I don't think it has to, because right now we've got a huge surplus of workers in that sort of professional realm, professional services, I guess they call them. But there's a massive shortage, still pervasive, in hospitality and retail, and places where people actually do like what we used to call work. So we're going to see
that's funny.
a massive sector-wide shifts, and don't forget, all these, whether it's the Google employees or Facebook or Amazon or the rest of these companies that are dropping whole layers of management, are all hitting the labor market at the same time. And I'm sorry, but having Twitter next to your resume is just not exactly a really great marketing tool for you as a professional. So these people may find themselves slinging fish before you know it, which would be actually very good for them.
So, Jeffrey, a lot of figureheads came out this year, and they basically changed the definition of a recession. In your opinion, are we currently in a recession, or do you still believe it's far out?
There's not a strict definition. There's a lot of times, people think of it as like this economic lexicon as somehow reflecting some scientific reality. It's not true. I mean, economics is full of metaphors. That's what everybody talks about. It's like, oh, the economy is overheated, or whatever. People talk in metaphors and act as if it's science. So there's no strict definition of recession. The rule of thumb has always been 2 quarters of declining GDP, if you believe GDP numbers. And even the most recent GDP numbers, which were not declining, showed a major reason for the absence of the decline had to do with government spending. Well, why is increases in government spending contributing to GDP? Well, it's a statistical artifact. So I think probably we are in a recession, and eventually it will be called backwards in time. But there's no question that Powell knows that a recession is it has to happen. We're never going to get rid of this inflation. I mean, it's just there. And just to be clear about the cause and effect, I don't mean that economic growth causes inflation. What I mean is getting control of the loose credit that we've been living with for a decade and a half. It requires fundamental changes in Federal Reserve policies that affect the yield curve, which in turn is going to massively shift the investment horizon from the bullshit long-term stuff to more short-term savings and investments. So just so we're clear on this, I mean, it's not that difficult to understand. I feel like I have to explain this to people all the time because people get very confused about it. But look, it's not been possible for a decade and a half now to really save money in the old-fashioned way and make money at the same time. And then that situation has gotten much worse over in the last 2 years. So if we're really going back to a world in which you can keep money in the bank and watch it grow with a regular rate of interest, in this case, maybe it's going to be 5, 6, 7, 8%. That's going to massively shift. With that yield curve shift, it's going to massively shift the uses of resources away from nonsense to real stuff, and cause a purging in the long-term projects that have proved themselves to be unsustainable in this yield curve environment.
Right. Now, Jeffrey, what is your outlook for the US dollar? Is the US dollar, like they'd say, heading for an epic Roman collapse, or is it just on a long decline in purchasing power?
People get very confused about this when people say, what's the status of the US dollar? I mean, there's 2 big ways you can look at it. One is its value as an international currency relative to other currencies. In that case, the dollar seems to be, the cleanest shirt in the laundry, as they say. I mean, it's doing very, very well and will continue to do so. That does not mean that its purchasing power, either domestically or internationally, is going to be able to be sustained. it's under pressure all over the world. So I don't know why this is so difficult for people to understand, but
Right.
it just is. Maybe it's just because the business pages are filled with headlines. One headline saying the dollar's weak, the other says the dollar's
Yeah.
strong. People go, oh, I give up. I can't understand it. But anyway, I basically just explained it to you. Now the inflation is truly embedded. As far as I can tell, and by embedded I mean it shows up in a number of different ways. One is in consumer expectations. People are expecting inflation. And that causes certain changes in the velocity of money that actually contribute to inflation.
Right.
The other is just rising labor costs, and those have to, those become a hot potato you have to pass around somewhere. The third is that um, the pace of the rise between consumer prices and producer prices has flipped over the course of the pandemic. Initially, consumer prices were rising much higher than producer prices, but that flipped in the other direction, causing a huge profitability squeeze. So you've got people really need to understand this, that you've got an entire producer sector out there that's been sort of delaying as long as possible,
Right.
passing on the price increases at the consumer level. And just as soon as that becomes possible, that's going to happen. And this is true across every industry. So we've still got a very long way to go.
Hmm. Now, Jeffrey, do you believe this is a completely off-topic question, but I want to get your personal take on it. Do you believe there's a serious chance of the U.S. heading for a civil war? A lot of people have been talking about this lately.
Well, it's a cliche that we're divided politically. I think the real war in this country is between an extra constitutional administrative state apparatus that imagines themselves to be the real managers of the country, and then the average bloke out there who imagines that the people we elect to office are actually running
Right.
things.
Right.
And there's no reconciling those two positions. So I'm not even sure the Civil War would be geographic so much as it is related to, who the great question of who's in charge, and we don't really have a clear answer to that right now. By the way, we saw it in the most recent midterms elections that so many states, county by county, voted red, and yet the Blues win, and
Right.
that's entirely because I was speaking specifically of the Senate here. That's because the big cities are basically in charge of the Senate. So just so that we understand, that was not supposed to be the constitutional structure. The Senate was supposed to be Congress was supposed to be bicameral. One branch, one division of the Congress was supposed to be elected by the people, like the House of Commons, and the other was supposed to be appointed by the state legislatures, which are drawn from the entire geography of the state.
Mm.
So that was supposed to be like the House of Lords, okay? And so that was the structure of the U.S. Constitution from 1789 all the way up to 1914. Then we passed the 17th Amendment, which blew that up. And now you have, like, why do we have a House and a Senate? Instead of, the only difference between them is the one is two people and the other is a bunch of different people depending on the population. But they're both voted entirely in by the people, which means the population centers are driving the entire country. That was a huge mistake, and
Right.
I'm not under any illusions that there's going to be a chance to repeal it, but I do think it would be a priority. You would have to get 2/3 of the Senate to repeal it, but that decision was a disaster. I mean, we repealed the 18th Amendment with the 19th Amendment. I just think we need another amendment to repeal the 17th Amendment.
Hmm. A lot of people, of course, are talking about that division, and they were talking about that a red sweep coming. Why do you believe there wasn't like a red sweep that was coming in this midterm?
Republicans had their hands all over the pandemic response, so they weren't able to run on that as effectively as they might have. So there was a shutdown of that topic, and everybody got super distracted by the stop the steal kind of stuff. And Trump,
Hmm.
basically handpicked most of the candidates, and they just got off topic. And as a result, they ran ineffective campaigns. So I think that's more important than any other observation here. But
Hmm.
there was a great deal of confusion I mean, we used to count votes in this country. Now we count ballots.
Right.
And so those are subject to a great deal of manipulation. But I think the
Mhm.
Republicans just blew a chance. They did. They thought somehow their victory was baked into the inevitable structure of the history or something like that, and they got weak. And instead of making clear arguments and
Mhm.
points, they just depended on a series of talking points and cliches.
Now with all the chaos in the market, where is Jeffrey putting his money? Is it gold, silver, both, or where are you putting your money investing?
Well, I think I think it's the old stuff, right? I mean, what you need to look at, so listeners need to understand.
Mhm.
Look back what was performing 15 years ago, and that's probably where your money ought to be. So,
Housing?
yeah, housing, land, oil and gas, and real stuff, real things in the real economy. So we can just kind of, there's whole sectors of the Nasdaq we can just throw away in the trash. I mean, the Zoom class is going to be purged. These big tech and media companies that lived off bullshit advertising and the whole fake economy 15 years ago is all
Right.
being systematically reversed right now. So that's where your performers are going to be in the future. It's not in this wacky world, where the companies are chasing ESG and DEI
Mhm.
and so on, like FTX did, uh, which had a very high rating on all the scales.
Yeah, it had a higher rating than I don't know. I was looking at it the other day.
Exxon,
Yeah, Exxon Mobil. It was just crazy.
even though they're
Totally.
stealing everybody's money, right? I mean, it's just what a racket. So yeah, that's what where I would like to believe that the
Hmm.
best place for your money will be in. Like, let's watch what happens to interest rates if Powell just keeps it up. But there could be a real chance that you can, for example, have a savings account.
That's a good one.
I don't know, just throwing it out there, maybe.
Oh, that's hilarious, Jeffrey. Well, we want to really appreciate you and we thank you for coming down to Wall Street Silver. And hopefully, we'd like to have you back on in 2, 3 months as the market develops.
That would be great, and thank you for your wonderful insight and your great work. You have a great intuition. I really appreciate it.
Thank you so much, Jeffrey. Talk to you soon.
All the best.